Silver is known to be a powerful hedge against inflation, and it proved to be so in the 1970s when its value increased by a staggering 3,700%, easily surpassing gold's return of around 1,400%. This fact should not be discounted, as silver was undoubtedly the trade of the decade. I firmly believe that this trend will continue, given that inflation is poised to be the defining feature of this decade, much like it was in the 70s. If we examine the inflationary pattern of the 70s, we can see that it did not increase steadily to a sustained high level. Instead, it rose, fell somewhat, but not to the previous low, and then rose again before falling once more, but still not to the previous low. During the 1970s, 3 significant waves of inflation occurred largely due to central banks reacting to inflation by raising interest rates. This caused the economy to struggle, prompting the banks to lower rates, which in turn allowed the economy to recover. However, each subsequent wave of inflation was higher than the previous one, as the banks had to continually raise rates to combat the inflation. Notably, the debt-to-GDP ratio in the US was only 35 during this time, allowing the central bank to raise rates without causing excessive strain on the economy. In contrast, today's debt-to-GDP ratio is almost 4 times higher, at nearly 130%, making it much more challenging for central banks to manage inflation. The predicament faced by the Federal Reserve can be referred to as the Fed's dilemma. The government's debt has reached a staggering $30 trillion, and paying interest on such a massive amount of debt at higher interest rates quickly becomes unmanageable. This not only affects the housing sector, which is a vital part of the economy, but also other peripheral industries and jobs. However, I am not overly concerned about this, as I believe that the Fed and other central banks have limited flexibility in raising rates. This, in turn, increases the likelihood of inflation spiraling out of control. Therefore, I believe that the investment demand for silver could become a defining characteristic of this decade. The significant impact that will propel silver prices to rise substantially is the remarkable surge in demand for silver ETFs in 2020, which totaled approximately 330 million ounces. This fact is noteworthy as it correlates with the workings of inflation. It is often assumed that a decrease in inflation would alleviate the negative effects, but it is crucial to recognize that inflation leads to persistent higher prices unless deflation occurs. Therefore, the heightened demand for silver, particularly from ETFs, and physical silver, reflects the current situation of sustained elevated prices. It's fascinating to observe how the holdings in ETFs of silver continue to build up over time. Despite significant drops in silver prices, the holdings in silver ETFs tend to remain relatively stable, a phenomenon that I like to refer to as sticky money in the silver market. This trend has been present for at least a decade, dating back to the inception of the first silver ETF in 2006, the SLV. As more people invest in silver ETFs, they tend to become long-term holders, leading to a sustained growth in holdings over time. It seems that silver is being taken off the market in a quasi-permanent manner, resulting in a gradual reduction of its supply. I am of the opinion that we are currently experiencing a new commodities super cycle, which was inevitably going to happen. However, the pandemic and the stimulus it brought about accelerated this process and put it back into high gear. In terms of risk management, there are several ways people can approach it, such as position sizing. I recommend purchasing silver investments in batches, splitting them into 2 or 3 purchases to reduce risk. The advantage of investing in silver is its volatility, which can benefit smaller retail investors who are not constrained like money managers. The latter have to deal with larger amounts of money and maintain liquidity, which limits their investment options to stocks listed on specific exchanges. When clients request to liquidate some of their holdings in the fund, the team needs to react promptly. As individual investors, we can afford to be more patient and wait for periods of weakness to take advantage of potential mispricings. It's important to remember that volatility can be an opportunity rather than a threat, and we shouldn't let it deter us from investing in silver. By embracing volatility and making it work in our favor, there can be significant rewards in investing in silver. As previously mentioned, the gains made by silver in the 1970s were significant, with a return of 37 times the initial investment. Considering this, it's not unreasonable to expect returns of 10 to 50, and in some cases even 100 times or more, for investments made in silver stocks during a massive silver bull. This has been observed recently with certain gold stocks that have moved from initial discovery to large, proven deposits during the early stages of a bull market. The potential for returns is immense and should not be overlooked. Given the economic outlook, it is advisable for individuals to have some level of exposure to silver. Despite the potential for only modest exposure, the potential benefits of investing in this field are significant. One should not disregard the great potential of silver, both in physical form and in the lower risk ETFs, mining companies, ETFs, larger producers, and royalty companies. Investing in these entities requires a certain level of conviction to understand where we stand in the bull market, but the rewards can be substantial. This is a worthwhile endeavor for all investors, even those who are older and seeking to minimize risk, as buying some silver points is a viable option. Something that is highly desirable to own is a commodity that is easily traded and recognized in your country. One such commodity is silver, which has been used as both a monetary metal and an industrial metal throughout history. Silver was even used in the US and Canada's coinage until the 1960s. While silver has a long history as a form of currency, it has become increasingly important as an industrial metal over the past 5 to 6 decades. In fact, over half of silver's annual consumption is now used in industrial applications, with 10% going towards solar power for solar panels. With the rise of the green energy revolution, silver has become even more critical in electronics, medicine, green energy, and automotive industries. All of these certainly are pushing requirements of silver, and that all contributes to it being irreplaceable.